Hello and welcome to another episode of Cosmic Cliff Notes. I'm your host, Clifton Smith, and as we are here looking for truth, as we coalesce the cosmic wisdom and extract from it the corresponding bits of wisdom that we can apply in the most complicated, esoteric areas to the most simple, basic inner child within each and all of us to our children. So, what we've been talking about is really the crystal structure and the lattice network of our reality. And in Cliff Notes, we talked really about how one can upgrade their operating software from a logical, linear perspective based on going through a series of experiences that transcend your belief structure. And in layman terms, is you live life and things happen, and you try to figure out how to operate and live in that kind of situation. And then from there, we started to recognize that as you upgrade the operating software, as you get older, as you become more conscious or just more aware of how things may interact and work, you start bringing in consideration for things outside of you, that being interpersonal relationships, how businesses operate, society operates, the nation and the world, for example. And so what we've done is we've really explored the framework of the crystallization or the scaffolding of these new thought patterns of not just how we operate and the implications of our actions, but how others in society as a whole interact. And we went through an exploration of baking brownies and layers of lasagna to recognize and understand when we get to the societal level and even with relationships, um, how when there's a certain amount of time and energy, especially energy, applied to keeping things in a particular way, um, then they start to crystallize and becomes much more challenging in terms of the amount of energy and consciousness needed to reshape that crystallization. Um, and today, what I want to talk about is uh, different ways we can approach that because that might lead to a bit of questioning what is it that we are going to do or be able to create in a situation where it seems like our cultural scaffolding is pretty well established. And what if we live in a society that has been pretty conservative and pretty structured in its ways for centuries or millennia? And one of the things that can happen is you can build onto that scaffolding, right? And you can, just like when you trim a bonsai tree, you can start to direct the growing of the tree. Or if you know, I'm going to be a farmer now, right? As you grow a tree, if you keep it upright, tied to another tree, it'll grow in a certain direction. Otherwise, it'll grow naturally to towards the sunlight. So look at your crystal lattice, look at your society, look at your relationship, and ask yourself if you believe that you can have change by simply directing energy to reconfigure the crystallization in a particular direction. Like you can reroute the stream to another area. Um, it's like if let me get another fun analogy here with baking. I'm getting really good with my analogies, clearly. Or it's like Jenga, the game Jenga. You just reroute. You take a piece out and you put it on, and you keep growing that stack. But the challenge with Jenga, right, and with growing a building, is that the higher you get, the more wobbly it could be, and the more resistant the structure would actually want to grow. Um, For example, there's a certain size that a river gets in terms of its width. There's a certain size of a building from a architectural perspective that a building can grow. Same thing for the depth of a relationship, or um, the understanding of society in their current structure. And so, if you are trying to build additional consciousness or build on top of an existing system, that just won't budge, won't move, because they've really gone to the top of the the height. They've gone to the highest they could build a building. It makes no sense to try to build another story on top of a building that can't go any higher. And in fact, the system itself will create these defense mechanisms to resist you trying to navigate the growth in a certain direction. And this is why we see certain companies reach a certain maximum in terms of revenue growth, or why certain relationships are just stagnant at a certain level of understanding and depth, and why society, no matter how much we try to go in a certain direction and put energy to reshape or to guide and steer um, the direction of society, of politics, it's just not going to work because the foundational structure resists that kind of change. Um, so, what do you do? Well, one of the things is you can introduce chaos to the system. You can shake up the system, and that's really what's happening. And you can rally around chaos. Whether that be uncertainty in financial markets, uncertainty in society, an event that creates uproar. Um, you can shake it up, and that's really what we're seeing in many areas, is that crystallization is being shaken up, that creates enough chaos that loosens the sharp crystallized, or the strong crystallized bonds, to allow there to be a change, because you can't add to that crystal structure, you can't add to that building. So you in a way, metaphorically, you shake up the building so it kind of falls down a few floors, so you can put the pieces back together a bit. Um, Jenga. If you knock over a few of the top five, the top half of the Jenga block, then you got plenty of space and stability to rebuild a stronger Jenga tower. So that's one thing, is you can use chaos to shake up the structure, to reassemble it. But of course, if the issue is still underpinned by the lower levels of the Jenga blocks, yeah, I like this analogy. The Jenga towers, if the instability is lower than what you knock it off at, the chaos isn't going to the core issue that needs to be solved and resolved. All you can do is build back up the Jenga tower to the level that it was at before. And so, um, adding on to an unstable foundation is really um, not the right approach, or can be limiting. Even if you are incisive, if you don't get to the core foundational issue, then the crystallization in the building on top won't be successful in actually solving the challenge. And so you'll see a repeated cycle in that. So, for example, um, we'll just move on because I can't. I'm getting, come on, baking analogy. Um, anyway, I want to be cognizant of your time. So another thing that you can do is you can build a new tower. You can build a new crystal. You can start with a new framework, completely new. And that's one of the things that we're seeing, and that's prevalent in startups, is that there's a challenge that enterprise isn't currently solving, and for whatever reason, doesn't have the time or resources or the potential return on investment to solve that challenge. And so instead of going into an existing infrastructure and architecture, you start completely new. Instead of trying to fix a relationship, you create a brand new one. Instead of trying to fix a society, you create a brand new society. But the challenge is to make sure that whatever you're starting new on, you apply those core lessons and understandings of why the current the pre-existing relationship, company, or society, um, you recognize, you understand why those core foundations didn't work, or understand where those challenges weren't actually being resolved. Because if you take the same approach um, to rebuild a new company that is solving a challenge, but not solving it at the foundational level, at the core that it should be, then you're going to be met with the same issue. So, for example, startups. One of the biggest challenges of startups is actually the culture. It's not about running out of money. It's not about having a great product. I mean, yes, those are all issues. But when you look at a repetitive patterning of those companies that are well funded and should be successful, what are the things that take it down? It's the culture. And if you go deeper, it's the compensation structure that incentivizes the culture to be in the way that it is, to expand very rapidly, to not focus on creating strong bonds and connections, um, because a strong culture can pivot, can handle tough times, will bring in people that aren't just paid mercenaries that will jump to the next company that's trying to headhunt them and give them a high signing bonus. So it's really important that if you're going to build new, that you really recognize and understand the true issue. And what we're seeing with enterprise is that we tend to focus on, when we build them, we tend to focus on sort of surface layer understanding of, do you have the right people who have the skills? Do you have the right amount of capital to do it? Is this a big enough opportunity? Well, one of the underpinnings that always gets lost is the culture being built in a stable, strong way. And the answer is no. And you can bring in all these cultural experts and innovation consultants and HR people and do all these supposedly team building exercises, but they're not getting to the root problem. And the root problem is that the founders get a astronomically greater percentage of the upside than future employees, that the investors early on get a greater upside. And what that does is that creates an incentive, because it's highly risky, to go after really big ideas and to grow really quickly. And it's like putting steroids onto an unstable foundation. And there are certain business models that it makes sense to go big, especially if your success is contingent on saturating the market. But if you're simply trying to grow to a certain level to appease investor pressure or greed, then that is pervasive in the culture and in the types of people you attract. So if you attract the investors who are really pushing for the 10, 100x return as fast as possible, you're going to be attracting the employees and a culture of that fast and loose growth, because it is simply just a roulette gamble, and it creates a very unstable structure. And that is the core underpinning and issue of startups. It is not about being undercapitalized or about making sure you have the right product or the right pricing strategy. It's the people, and the people you bring and how you bring them on and what you're incentivizing them to do. Because it could be a great culture, but you're driving them to exhaustion. And we know that there is a declining rate of productivity for a certain number of hours you work. And those early decisions that you make have a huge impact on the success of your company. If you're making this from an exhausted state, then you're going to make a suboptimal decision. Furthermore, the pressure and the burnout of this kind of pace is not only unhealthy, it trickles down from the top of the organization to the mid tier and frontline workers. Because if your boss is unhappy or your boss is stressed, well, that stress is going to be placed upon you and you're going to place it downwards. And so looking at it, why is your boss stressed? It's because the people on the board who's deciding whether or not your boss is going to have a job is saying, here are the benchmark returns that you need to meet, and you need to meet a certain large number because I'm taking a huge risk and investing in very risky activities. And so I'm only investing in projects that will return 100 or 1,000, potential 1,000 times return because of my portfolio theory where I'm taking very high risk gambles. Instead of looking at how to make lower risk gambles and adjusting returns accordingly by creating a strong, solid structure and infrastructure and understanding truly how to make a lasting organization, the industry has really spent a lot of time focusing on ideation and just throwing stuff at a wall and seeing what sticks with the same methodology and the same financial rewards and structure and system of we're only going to invest in high risk, high return companies. And so what that does is that incentivizes grandiose ideas and people to take on grandiose ideas. And while there's nothing wrong with that, what this does is this provides a large opportunity for companies or thought leaders to really take a step back and say, why are we not focusing on how to make companies more successful through strengthening the culture, through strengthening the organization? Why is it that we are valuing certain metrics over the strength of the team that is being formed? Why can't we take a people focused investment thesis, knowing that if we have high performing teams, they will find a great solution? And if you don't think that's a strategy that works, that's exactly what Elon Musk does. Is he goes after these large ideas, but he throws so much money at it and brings on such incredible talent that they'll find a way, they'll find a solution. And startups from the very beginning go off of best guess theories and hypotheses that require there to be feedback and pivoting multiple times. And so why not build an organization that goes after these lofty ideas, but with a keen focus on creating strong, sound, high performing organizations that really becomes the core asset of what the investors are investing in, rather than going after the half baked idea and supporting the founders to go out and execute on that idea in a culture and growth trajectory that is unstable and leads to burnout and toxicity. It's just one of those areas that baffles. It's like saying, let's grow this crystal from the ground up as fast as possible. And if it falls, let's go to another one. As opposed to saying, let's build this crystal very strong and take our lessons and understanding of why certain crystals didn't form properly and apply that to the next. What they simply focus on is can we build a crystal that's multiple floor stories high? And even one of the challenges with Monsanto and with some of the um, fertilizers and the genetically modified organisms is that they were pursuing the same thing. They were pursuing growth at all costs. And what happened was that the plant couldn't form the strong structures and was placed like cellularly placing um, carbohydrates and other quickly made uh, protein and molecules uh, to replace strong structured scaffolding that was actually sturdy and could withstand a lot of volatility. The same thing too with their roots. Their roots were so shallow that they couldn't go deep enough because they were growing at such a rapid rate that they didn't allow the roots to really sink into the ground. And that means that they are vulnerable uh, to to winds because they're not rooted strong enough. That means they're not capable of extracting the nutrients that are in the soil because they can't go as far down as others. And so the same thing is happening with all of this money in venture capital. Is one of the challenging things to do is not come up with some idea, because as we mentioned in Cliff Notes, you an idea is a thought current that you simply have to elevate your vibrational frequency to receive. And this is happening left and right with people with the advent of the conscious awakening, with meditation, with psychedelic experiences. So it's not the idea really that is of value, it's the structure and the integrity and the grounding of the organization to make the idea into reality. And the underpinning challenge in venture capital or in startups is that the compensation, the reward, is structured to not allow there to be deep roots for it forming, not allow there to be strong crystallization of company culture, but rather really infuse a growth at all costs trajectory that creates instability. And as I mentioned yesterday, your first five hires are so key that it really dictates the rest of your company culture unless you have really strong rails in place to keep them focused and adhering to a particular uh, company cultural ethos. And how do you create that? How do you create strong roots? How do you create a strong, solid, crystalline structure? And that's really what entrepreneurship and venture capitalists should be focused on, because then that reduces your your rate of failure due to cultural instability. And if you've already invested such a significant amount of capital into a company, you can easily replace another idea through the machine of the structure that you've created. And that's what venture capital is completely missing, is they're putting all this energy and effort behind the idea and the core founders rather than focusing on building a solid culture and a solid organization. Because with that, you can create the practices and habits to take any idea and put it through the system, and it pumps out results that can be pivoted upon. Because that's really what you need, is you need to be able to withstand all the different iterations of data that's being fed back to you. And so as a founder, what you're doing is you're giving up that opportunity to build a strong culture, a strong structure, because you're betting it all on black 18 or red 18. You're betting it all on your idea rather than pursuing, yes, an idea which is your best guess that has a great opportunity and a great market to it. But you're not building the structure to and the organization to handle the feedback. You essentially have to make these predictions to build a rapidly scaled organization and then be received with feedback whether it works or not, and pivot a few times, but in the process your culture and your team is falling left and right. You're repairing it by hiring mercenaries for hires to come in to jump in, and the culture is just toxic. You make unethical decisions, and it comes out later on why it failed, or it gets swept under the rug for why it succeeded. And it's in those moments of moral, ethical, and operational decisions that is the great failure of enterprise right now, and the sheer amount of money that is being put into the venture capital landscape. And it also creates perverse incentives for people to jump ship when there's a bit of hardship, or when things might not look as good. And it creates this idea of just mercenary for hire culture. And that's really an exit strategy for venture capitalists to make sure their money gets returned, because you're building an organization that's struggling to get over the finish line, and that finish line is an acquisition. So if you have a strong organization, you're less likely to accept an acquisition, rather than if you are like barely making it, and you're given an acquisition offer, you're going to take it because you know how crazy everything in the back is, and the culture that you built is. And you want an exit too, because you have a large amount at stake for your compensation, for your founder shares to actually be worth anything, because you worked so long. So you're really working hard towards an exit, just as much as the venture capitalists are. But what you're missing is the employees that come through that work on these projects. What you're missing is the toxicity that is pervasive in the startup cultures, and that is a huge waste and an unnecessary financial risk that is being taken in the venture capital industry, which pushes this idea of taking on large projects in a very risky manner. Nothing wrong about a large project, but the rate at which you do it is the challenge. And of course, market competition is one of the issues with that, is that if you move a little slower and with a little steadier structure, you'll invite a new entrant or a few competitors to eat at your margin. But one of the hypotheses is that you can always be emulated, and look at how innovation is being adopted and copied in Africa, India, and China based off of what's working in the US, and how we have innovation drain to certain parts of the region. Um, and there is incredible innovation all over the world, mind you. But you can never duplicate the innovative mindset of a strong, high performing organization. And this is exactly what the investment and entrepreneurial community is completely missing. And what it does is it favors the venture capitalists, because they get to continue to make these large, outsized bets. It continues to reward the startup founders to take on these crazy ideas and to continue to build these crazy organizations. But then the organizations get taken away away from them, and um, it also creates perverse culture. So when you build your crystal lattice of something that you want to last longer, where do you go if you're building an enterprise that you wish to last for a lifetime? And how do you align people and individuals to enter into that organization? One is to be purpose driven, that is beyond all other things about championing that purpose. That even if competitors come in, the intentionality with which you build the core culture and you champion the purpose makes it impossible for new entrants to come in and succeed. Another one is to completely change the compensation model that disincentivize people who aren't aligned with the purpose to join, and a return opportunity that keeps out the venture capitalists who have a specific return threshold in mind. And if you do that, then the question is where do you get capital? And the beautiful part is you attract the same kind of capital as the intentionality of the company and the purpose that you're creating. So if you're creating something that you're looking to last a lifetime, that you're looking to um, have as your legacy, then you will attract capital that is looking to leave a legacy. If you're looking to be extremely purpose driven, you're going to attract purpose driven capital. And so, what I'm offering is an opportunity and a lens, perhaps poorly researched and cited, but to really look at how, if you are a purpose driven entrepreneur, if you believe in a better world, especially at the core foundations of what society is struggling with, um, healthcare, education, um, farming, water resources, relationships, et cetera, et cetera. Don't go after the quick and easy, fast money that's going to drive you to take on a massive growth trajectory unless you can really, honestly establish a strong culture and strong cultural framework. And instead, if you're that purpose driven, where it's something that you are committed to for a lifetime, then attract that same type of investors who see it the same way you do, and attract the same type of employees who see it the same way you do, and understand that there will be vendors and customers who are beginning to wake up and recognize the implications of their purchasing power and their supplying power, and consciously making choices to support enterprises that are very intentional in their purpose and very much staunch advocates for demonstrating their values and their ethos, that other organizations may have similar products, but they can't compete with a purpose driven organization that is strongly built, intentionally built, because the compensation structure is altered. And so, if you were to raise a venture capital fund that went after and compensated founders differently, that provided a return threshold that was different than the standard, and did so in a very purpose driven way, then you've essentially created a blue ocean, a whole new crystal that you can create. And that's exactly what we're doing here at Eden. And a place where we invite you to explore really, why is it that enterprise and the most top talent is being drawn to a structure that is fast and loose, that has cultural issues, that rewards burnout. And I tell you, it's because of the core foundational way in which venture capital is currently being played, and the game and the return incentives that are offered to the founders and to the early investors and the venture capitalists. And so to change that requires a rethinking of the way companies are structured, founders are compensated, and investors are compensated. Because what's interesting is if you can find a solution that reduces or minimizes the failure rate of these companies and allow there to be a longer term understanding of the development and growth of these companies, and companies that aren't contingent upon a exit, then you've really begun to tap into the entrepreneurial spirit and begun to tap into a whole pool of capital that is at the retirement age looking at how they can leave their legacy and promising to create a purpose driven enterprise that will be grown with legacy in mind is a huge blue ocean strategy for people to think about and to consider. And more importantly, consider how that kind of an organization will feel and will be for you to create or to work at. Something that recognizes your whole being, something that compensates you fairly, something that doesn't push you towards burnout, but holds you towards greater understanding and growth and development of your skills. Something that builds a strong sense of community and culture, and how that kind of an organization can actually enter into solving some of the most challenging and complicated situations that society faces, not because it's some super genius organization, but because it has the strength and the fortitude and the structure to take on these uncharted territories or these multi dimensional challenges that require a significant amount of patience and interdisciplinary teamwork to go out with the best guess and create solutions and iterate on those solutions and feel safe that if the solutions aren't the fastest growing revenue generating solutions, that those solutions are still being honored and received and tested because perhaps it's those slow growing solutions that are the exact specific solutions that are needed to solve these challenges in things like healthcare, education, real estate, etc. And enterprise needs to create a playground and a sandbox for that to happen. So perhaps one of the biggest reasons why we're seeing all these non effective solutions being thrown at these challenges is not because of a lack of money or funding for ideas, but rather the incentive structure, the compensation structure to solve these challenges are pushing a particular type of thought current to take on very large, bold endeavors that are very rapid in scale. But in reality, the solution may actually be slow and steady, and there isn't a current investment platform that will that is built for those kinds of solutions to exist. So that's what we're doing. So thank you for following. I know it has been a lot of where is he going with this, and that's really where I was going with it, was the understanding that as we upgrade our operating software and we start to see relationships in society, we wonder how we can make an impact. And one of the things we can do is we can continue to build and direct the energy and the scaffolding towards a particular area. We also understand the amount of limitation that may apply. So we create chaos to change certain levels of that Jenga tower, to reconfigure it to make it stronger. And we can be very incisive, cut that lasagna, be very incisive in how we change that Jenga structure. But if we don't get to the core floor or the foundational level that has the issue and the challenge, that the real problem with it, then we will just restack the Jenga tower and be faced with the same issue we see. And when we take that into enterprise, it may actually just be that the reason society is not solving the, some of these big challenges is because one, the large corporations are so set in their structured way, they can't make that foundational core change to address the issue. And two, the enterprises and the startups are structured in a way that don't actually address the core foundational issue as to why we aren't actually solving that issue in the first place, which is the incentive structure and the desire to rapidly grow and scale companies, which creates instability in the company culture and in this mercenary type environment for top talent and for taking on grandiose ideas for the solutions that would be applied to the situation that need to be rapidly scalable. And so perhaps, and that's really what we're looking at here at Eden, is a framework that goes to the core of relooking at the compensation structure for the investors and for the founders to really provide a more purpose driven, culture oriented, holistic model to allow there to be opportunity for solutions that don't necessarily fit the return thresholds that the venture capitalists are looking for and that don't create perverse incentives for the founders to scale at all costs for an exit. And that really is about identifying and aligning investors that are looking and craving for legacy type opportunities that are solutions that may take a bit of time but are very thoughtful and intentional um, in terms of the organization that is being built to make sure that the organization's growth is as mindful and strong as possible, knowing that we are entering into um, areas and industries where we need to be anti-fragile, where we need to be able to run specific hypotheses and tests to provide feedback for the theories and the multi-dimensional and multidisciplinary challenges and solutions that are necessary for what we see as some of the largest problems in society. So I'll leave you with that. Yeah. In a way, it's kind of like your Thanksgiving dinner. You know, what does everyone talk about at Thanksgiving dinner? It's typically the turkey, right? But if all you have is just a big turkey and everyone at the table is looking to bring turkey to the Thanksgiving dinner, uh, you're going to be left unsatisfied. And what if the solution actually to your digestion is to have some vegetables? Well, who's going to bring the vegetables? Well, if everyone's going after the turkey because that's what everyone is being rewarded for and talked about as the turkey, um, no one's going to bring the delicious, green bean casserole. And more importantly, no one's going to want to refine the art of pairing the turkey with the side dishes. Um, yeah, I guess maybe that analogy holds, right? And so your Thanksgiving meal isn't just about the turkey. And when you think about Thanksgiving, it may be that the turkey gets a lot of the attention, but really to make it a full meal, it's to bring all those side dishes. That's really what makes it a Thanksgiving dinner. And it's not just about rewarding the person who builds who makes the turkey. It's also about rewarding in the same manner those who build the dishes, and all of us can partake in the celebration of Thanksgiving dinner. And what drives the desire to make the turkey and all these side dishes is the purpose of Thanksgiving isn't just to eat a big meal, it's to give thanks and appreciation. And so um, be clear on the purpose why you are in the enterprise and why you are pursuing a solution to a challenge to society. If you're doing it for the fast money, then there's a certain area for you. But if you're doing it because you're so purpose aligned, then that's a great starting point. So as you can see, it's getting dark here, and I thank you for watching.